Your home, as long as you're flexible with your concessions inside of your negotiation, is going to become a hot commodity. So be ready, talk to your agent on your timing, and get that house listed. And then market uncertainty. Uncertainty is a perfect word in what we're dealing with today. Trade tensions can lead to economic volatility and fluctuating mortgage and market rates. I'm here to warn you. You can make a lot of money in the stock market. You can also lose your ass, including your 401ks and all these monies that reside and rely on those market strategies. So if you're counting on that as your base of future and retirement income, you need to beware that you have a more volatile market than you have seen in probably 20 years. Watch your numbers. You may find this is a good time to change your leverage points from a very hot market or a very cold market, depending on the day of the week, to a traditionally more sustainable, longer runway, easier predictability housing market. It all makes sure that your investments capitalize. If you are okay with the long game, the real estate market is fantastic. If you're a first-time home buyer and this is your first opportunity, your home could and should be an investment for you to be able to move on in the future. If you're a younger buyer, you've got more time to take more risk and can wait longer if necessary if the market shifts. Sorry, those of us that are retirees may not be in that situation. We don't have time to wait. So maybe that's not the solution for us. But that market uncertainty is going to change how the feds raise or lower the interest rates, which is what controls whether everybody else buys or sells. Break down tariffs a little further. What the hell are they and why do they matter? Governments globally impose tariffs, again, which are taxes on imported goods to their country. This makes foreign products more expensive and will give a local business a competitive advantage. It makes their locally grown, owned, built, assembled, US made product is going to now equalize their pricing. I'm not saying their prices are going to get cheaper. There's a greed out there that nobody's going to lower their price just because everybody else's prices are going up. If everybody else's prices are going up because of the cost of importing through this new tariff plan, then keeping their prices the same or making sure their prices stay leveraged or level is going to help make it a manufacturing decision, a quality of product decision versus a cheaper goods decision. So here's the catch. The price increase can have a ripple effect that reaches beyond the traditional retailer and far beyond your wallet, especially when it's coming to home building materials. For home buyers and investors, this means paying for construction costs and essential materials like the steel, lumber, and even appliances, honestly, are going to change. And as these costs rise, it's going to be up to the builders of whether or not they're going to adjust their pricing model to compensate or whether they're going to take the hit because the competition will be less. Hear what I'm telling you. Your builder has a choice. Your builder proved to us in the last year when interest rates were high and they could control their interest rates with their internal lenders that they can control their own market. So if the new home builder wants to make adjustments in how they're going to hit their margins or take the hit to keep their housing prices the same because houses that are made with foreign made materials or whatever are going to be more expensive, then they can make that choice. They can make that option. That's going to affect the big box builders that are buying massive amounts of imported materials to try to save margin and to save building cost versus your local builder that may not need to do that. For home buyers and investors, this means that they could potentially pay more for construction costs if they choose the builder that decides their margin is more important than building a solid product with locally sourced goods and materials. This is going to make it a lot harder for potential buyers to afford their dream home if their dream home is built by foreign materials. So what I'm asking my buyers to do, if you're in the new home market, I'm asking you to shop around better. use your real estate agent because they have connections. They know what's happening in the market. They have done business with a handful of builders out there. They know what their interest rates are. They know what their building costs are. They know whether or not the development that they're building the house in is going up or down in value, which essentially sets the target pricing for how that next house is going to be built, bought, sold, and designed to be pitched to you in whatever their local marketing fashion is at that given moment. You need to do more business now with a real estate agent when you're working with a new home builder than ever before, because those relationships matter. It's who you know that's going to take care of you, that are going to make the difference, and that's going to save you money in the long run, meaning you can capitalize on your investment's value in the long run. How would tariffs affect mortgage rates? Tariffs could impact the mortgage rates in various ways. I'm going to present both opportunities and the challenges for both home buyers and investors. I had to take several notes on this one, so bear with me. Potential benefit. There is some short-term mortgage rate relief. Tariff uncertainty will lead investors to safer assets. They will move to treasury bonds, which will temporarily lower the yields, and this will provide a brief window for home buyers to lock in lower mortgage rates before they rise again. Drawback to that is potentially long-term rate increases. So persistent tariff-driven inflation may prompt the Federal Reserve to raise the interest rates because of the uncertainty scare, leading to the higher mortgage rates over time. You want to watch both. Listen to the feds, watch what they adjust, and then see how you can take advantage of it in the current market. Let's talk about the increase in rental demand. Higher mortgage rates, or if the mortgage rates continue to stay where they are, it's going to prompt potential buyers to enter the rental market. That will boost rental income for those investors, with the understanding that, on the converse, rising construction costs will affect the elevation of repair costs for those same investors. So, like it or not, traditionally, a renter is not going to take care of your property as well as an owner. And I mean traditionally, because believe me, there's plenty of owners out there that do not take care of their product either. But I need you to understand how the repairs and the keeping that, and to keep that house up to sellability, is going to cost you some money as well. And again, it can be as simple as the importation tariffs on foreign appliances that make the difference. There's also potential for lower home prices, right? If tariffs damper the consumer demand on new builds, because obviously tariffs aren't going to directly affect pre-sale homes, it could change the economic growth. So the home prices will stabilize or potentially even decrease. And what changes that, of course, is market volatility. Plenty of uncertainty around trade policies can lead to all types of fluctuations. That's what makes it challenging. That's what makes it difficult for investors to predict short-term market movements. The craziest thing that you can do in real estate is expect that you're going to buy a house and get out of it within 2 and 3 years and expect to be able to make up the money that you sunk into it. And I'm talking to you, my VA buyers, too. Just because you came to the table with no money down and you took advantages of a great VA program that's offered to you, it also means you didn't walk into the home with equity. So it's going to take you even longer to produce an equitable gap. So when you have to PCS out, or whether you decide to go ahead and retire, it's going to be important that your home either held or gained in value because of the market that you bought in or the state that you purchased in. And you're going to have to understand that your biggest marketable change is going to be time. I have to say there's also opportunity here for strategic investment. Those of you with capital and have access to money, you may find opportunities to acquire properties at lower prices during a market turn down. So if the changes in the builder's market push everybody into the resale market, chances are you can take advantage on both ends of the spectrum. Again, it's an investment. I don't care if you're buying Microsoft stock versus IBM stock. You need to watch them both, see what these companies are changing before you make a purchase. It's the exact same thing in the housing market. It's just typically a larger investment for you. By the way, all of it, in uncertainty specifically, will lead to tighter lending standards. That is an absolute truth. Economic uncertainty, higher borrower costs will absolutely prompt lenders to tighten their credit standards, making it harder for potential buyers to qualify. So even if rates drop, if there's still an uncertain market, you may not be able to buy because the people that want to buy or need to buy before were priced out of the market. Now we're qualified out of the market. So let's drill it back down to the agency perspective for a minute. Agents and brokers, listen up. What does this mean for us? What are the implications of tariffs directly affecting us as agents, brokers, and agencies? The impact of tariffs on a housing sector is multifaceted. While some mortgage rates will initially dip, and they did following Trump's initial announcement, the overall uncertainty has caused home buyers and investment to be more cautious, more risk averse. It has actually slowed down the buyer pattern because they don't know what's happened next. President Trump has only been in office for a little over 100 days. He's made massive adjustments across the board, and they have not had time to adjust. The dust has not settled long enough for anybody to get any clear vision as to what's next. If you don't have the inside information, you're afraid to make a move with everything that's going on. Now, this hesitation has slowed down home sales, hasn't stopped it.